This conference will now be recorded.
Hey everyone, I am Steve Sminsky on behalf of Wealth Foundations Northwest. I'd like to welcome you all to the Weekly Prepper, getting you ready for the week of February 23rd, 2026. Just a quick reminder that your trades are yours, not ours. We don't act as advisors in any way, shape, or form. Trading does in fact involve risk. And so, I am going to do the Weekly Prepper this week. After all, I wasn't sure I was going to do it, and I'm not going to put on any new trades until we see how the Iran war reaction kind of settles out. So when we go to the trading lab later this week, that we'll decide that maybe we'll get long energy, maybe we'll get long defensive. But things are probably going to start to get choppy here anyway as we go into the month of March for our seasonality. And so basically last week is that we're still in range, going back and forth, two-sided market, a little bit saggy. NVIDIA had great earnings, but still failed. The Iran strikes are already underway this weekend. The last time something like this, oil spiked, but then sold off, and the markets weren't affected long term, but it wouldn't doubt if there was a little bit of a sell-off. PPI report was much higher than expected, and that did cause a gap down on Friday. So that already happened, and that sort of settled. I wouldn't say it, rallied a ton, but it definitely sort of settled out. But gold at the end of the day was still strong. So gold was strong during that market pullback. But so you can see that there's a difference between the weighted and the regular SPY and the unweighted SPY. So basically what the saying is that the larger cap stocks, the big mega stocks, the AI stocks are not performing, but the rest of the stocks are doing pretty okay. So the Qs were down, the SPY was down, the Russell was down, everything was down, but a lot of stocks are doing fine. And so gold was up and Bitcoin still continues to struggle, just can't get out of its own way. So financials, consumer, and tech were still negative as they were the week before. And so we found in the one-day performance, energy, consumer, defensive, healthcare, we're leading the way again, as they have for a while. So energy's already been pretty strong, even for the last month or so. Maybe it was in anticipation of an Iran war. I don't know, but you can see that there's a lot of green on the screen and a lot of red on the left-hand side. Financials still weak. A lot of the big cap stocks are still weak, but not all of them. And on the right-hand side, it's a lot of green on the screen. So it's a stock pickers, sector pickers type of market. So we did go short financials here recently, and we've been long gold. So we've gotten those two things right, and we've also been long healthcare, and that's been fine. And so we did add a little something in insurance, and insurance has been a bright spot within the area of financials. So we're really well positioned. Our portfolio doing extremely well, nearly 50% return in 2 months. Okay, so you can't complain about that. But I'm not going to add anything new just yet. Okay, look ahead. Expect an Iran war reaction of some kind, and just let that settle out. Neither the bulls nor the bears are winning right now. Be patient on technology. I think there will be a bid on technology at some point. NVIDIA did not kickstart that. I thought it might, but it didn't. So you got to trade the market in front of you. There are still plenty of other strong sectors out there. Possible market movers, basically the ISM manufacturing on Monday and ISM services on Wednesday. ADP report also on Wednesday. The usual jobless claims Thursday. We had some retail and payroll information on Friday. The earnings isn't much, just a spattering of stocks. Target, Best Buy, Costco, not big market movers as the earnings season winds down. So still strong this week. Energy, and probably will get stronger. Utilities and all of these. So this is consumer staples, in case you don't have these memorized. Real estate, materials, and industrials. Moderate communications and healthcare, and then the weak sectors remain financials and consumer and tech. Okay, so tech is still struggling. So here are all of the earnings for this coming week. So if you have any of these stocks, be aware that it's coming. It's coming. Sienna has been on an absolute rip, snort, and tear. I wrote some of that up and closed it out in one of my other accounts. And Abgo has been really bad, and we'll see what happens to them after the earnings as well. So I did have a bearish trade on them and closed that out. Fortunately, a day early because it dropped like 20 bucks. But nonetheless, they'll be reporting this week, and we'll go from there. So that's all I have for right now. No new trades. We're well positioned. We're going to stay well positioned. If you want to see what we've got on, it's basically the new trade on AIG, which is doing well. That's one of the strong parts of financials. Gold, which has been on a tear. We added to our gold trade. Semiconductor holding on okay. So we've continued on with semiconductor as a cash flow trade, and healthcare and financials to the bear side, both winning. And we're winning through attrition, a war of attrition on healthcare. So it says we're down, but we're actually up on that one. And same thing with the semiconductor, we're just continuing cash flow. So if we look at the charts on some of these things like XLF, looking very saggy. So we got in at a good time to the downside on XLF. And here is XLV, which doing pretty well, actually, getting stronger. So we're happy that we were patient on that one. SMH took a little bit of a dip with NVIDIA, but it's not broken. It's not broken, and it goes near the high of the day. So we're still okay in that trade as well, but we got it on a tighter position. On behalf of Wealth Foundations Northwest, it has been my pleasure to have been your coach today. Good luck, good trading, everybody. We'll see you next time. Take care. Bye-bye.